America, Iran, Israel, everybody is involved in war. So there is always a risk of money in the equity market. So what kind of risk you foresee in the fund?
Prakash Jain, I'll give you a frank opinion about this because if you're talking about the war, I have to give you answer in a global perspective, not certainly related to my fund. See, Corona was the worst event we have seen in the human mankind.
Correct.
Capital market point of view.
Correct.
10 months and some 20 days, we were back to the normal.
Yeah, it was a V-shaped recovery which we saw.
After Corona, what has not happened? There was a war in Russia, we had a war in Gaza. See, if any fund manager is telling you I can catch the cycle, so my statement to all the investors is, cycles will come and go. Have a faith in the Indian economy. Try to create the delta on the date of entry that can be available only in unlisted. Listed is relatively tough.
Agreed.
Clear the compliances. At max 4-5 months waiting here and there because of the market situation can happen.
Hello everyone, my name is Prakash Jain. I am the Chief Business Officer with the Wealth Company. Today we have Mr. CA Nishad Khanolkar, who is the President and Fund Manager with the Bharat Value Fund. Today we would be discussing about, for the educational purpose, how the fund invests in various companies, how it exits, what's the process of wealth creation.
So thanks Prakash for inviting me on your podcast. You have already put a disclaimer that whatever today you and me are going to speak is only for the purpose of investors' education and awareness. There is nothing beyond that. So the biggest brand that we have today as of now, which is our traditionally, is Pantomath Group.
Correct.
So Pantomath Group has been India's largest mid-market merchant bank. For the benefit of everybody, merchant bank technically is a license issued by regulators to lead the IPO.
Okay.
Pantomath started its operation 13 years ago, and in last 13 years, Pantomath has successfully executed 119 IPOs.
Great.
Just to keep it on record, in the month of August 2025, Pantomath executed 3 main board IPOs in a single month.
Okay.
That's a good thing. So that's the Pantomath Group. Coming back to the Wealth Company, Wealth Company has again 2 products. So Wealth Company is like the asset management.
Okay.
So Pantomath is like an advisor. Wealth Company is like the asset management company. So Wealth Company has 2 products.
Okay.
The flagship product of Wealth Company is Bharat Value Fund.
Okay.
Which I am managing along with Madhu, and I have 2 more colleagues, Tejas and Pratik. So AIF is we have a Cat 2 AIF wherein we majorly invest into the unlisted opportunities.
Okay.
So today at AIF we have close to asset under engagement close to 8,000 crore in a span of 4 years.
Okay.
At the same time, Wealth Company has its own mutual fund also. So mutual fund we almost started 4 months ago, and close to 2,500 crore AUM is Wealth Company has generated under mutual fund. So AIF plus mutual fund, Wealth Company is close to 11,500 crore. That's the asset under engagement for the wealth companies. Plus, in addition to that, we have a group company called as Asit C. Mehta, one of the oldest broking house. The owner of Asit C. Mehta is Miss Dina Mehta, who was the first and the only lady chairman of Bombay Stock Exchange. So this is the broad group perspective about the wealth company and its group companies.
Okay. So since you said Bharat Value Fund is the flagship product which you have, so I believe it's a Cat 2 AIF. So can you just brief us what's the philosophy and how do you invest in the companies where you look forward?
So Cat 2 AIF, being a Cat 2 AIF, so right now we are into the series 4 and we recently launched the fund of fund. But Prakash ji, if you see the earlier series, so I would say whatever is the corpus of the series, 15 to 20% we have selected to invest into the listed opportunities.
Okay.
15 to 20%.
Okay.
And 80 to 85% of the corpus we have invested into unlisted opportunity.
Okay.
Coming back to the unlisted, we have there are various parameters, but one broad parameters which probably we have never deviated is, say we are giving money to a company, we are investing equity money into a company, clear cut vision, invest in those companies which can go for IPO in 3 years. Okay. That's the bottom line about the unlisted opportunity.
Okay.
And 15% to 20% goes into the listed, which is momentum based. Sometimes listed is invested to support the exit of unlisted company.
Okay.
So in short, this is a Cat 2 exit oriented category 2 AIF, wherein we invest into unlisted companies which are likely to go for IPO in
Got it.
3 years.
Got it. So, since you said ki one of the major criteria during investment is to look forward that the company is looking for an IPO in 2.5 years. Apart from that, what are the other basic parameters which you look forward in any company? Like, how do you invest? Can you just elaborate in a minute or so?
Sure. So, Prakashji, the most important parameters is okay, wherever we are invested, we have at a broad level, though in detail I will speak also. At a broad level, there are 3 parameters which I personally believe that whenever you are investing or whenever you are selecting a category 2 AIF, I think you need to ask yourself about the 3 questions which I always say. The first point is fund manager capable of executing the exits?
Correct.
Because one clear rule in unlisted, if you exit, money comes to your bank account. If you fail to exit, that's a paper return, and beyond a point, sorry to say that paper and a tissue paper has a same valuation.
Correct.
So point is, first point, can fund manager execute the exit? Has it executed exits in the previous track record?
Previous tracks.
In fact, I would say Prakash is like a chakravyuh. Even if the fund manager is showing exit at a little bit downwards, still he can exit.
Correct.
Against 100, he'll give you 80. That 80 you can invest and get 120. But if it fails to exit, 100 technically becomes 0.
Got it.
So that's rule number 1. Second rule is very important. In my opinion, people say you invest money for upside in the valuation. It's a no-brainer.
Correct.
My point is how the valuations will go up. The valuations can go up only because the balance sheet size should increase.
Correct.
It could be increase in revenue, increase in profit, increase in margins, you appoint CEO, you appoint CFO, because valuation, only incremental of valuation without balance sheet increase can happen because of liquidity.
Correct.
Liquidity, today it is there, tomorrow it is not there.
Correct.
But if the balance sheet size increases, the valuation has to increase.
Correct.
But to increase the balance sheet size, you need to give the primary.
Got it.
So wealth company has given most of the primary money till today.
Okay.
And third very clear rule, intent of the promoter.
Correct.
Akashji, very simple. My mother used to say, I'm sure your mother also must have said the same thing. Never invest in a horse. No? Horse is like the equity.
Correct.
Promoter is like a jockey. Invest on a jockey.
Correct.
If the jockey is continuing, if jockey is increasing his stake, go for it. But simple, if the promoter is exiting and you are entering, because then that's a question mark. So
Got it.
These 3 reasons, can you exit? Whatever money I am investing, is it primary, means growth capital?
Correct.
Or is it going to somebody else? And third point is very important, what is the intent of the promoter?
Got it.
If I give you just parallel example about the wealth company, so I'm exit, Pantomath has done 119 IPOs. Till today, whatever money we are invested, more than 85% money is primary in nature.
Okay.
And in most of our investee companies, forget the exit of the promoter. In fact, the second generations have also joined.
Correct.
So it's like cricket. All 3 tick. Pitch in line, impact in line, hitting stump wicket, third umpire gives you the out. It's like these 3 things.
Got it. So I think you have nicely covered how you generally invest in the company. So see, primarily I have seen it's very easy to enter or invest in any stock. But the most important or the problem which I have seen in my career of last 22 years is the exit. Because at the end of the day, you rightly said, if the exit is not happen, the paper money or the tissue paper, it remains the same. So what are the exit clauses do you put in so that investors are really safeguard and there's a clear-cut clarity, yes, if X does not happen, Y will happen, then Z will happen. So is there any agreement which you do with the investee company?
Certainly, Prakash. We definitely do the agreement. It is called a shareholders agreement.
Correct.
And since I am investing the fresh capital, there is also share subscription agreement because I am subscribing to the new agreement.
Correct.
So in the shareholders agreement, suppose I am investing in your company, for example, you are a promoter. There are basically roles and responsibilities between you and me. But before I sign the agreement, I would like to mention one thing for the benefit of all the investors, which I have learned from my past experience of 20 years. Prakash, always say mind mapping is important than the
Agreed.
watertight agreement.
Agreed.
You drag me on the agreement, I'll come back to that. But mind mapping. Question is, if your and mine mind is mapped, we both will go in the same direction. How do you map the mind? Simple. It's a grown-up company. Probably promoter has never sold his stake. His second generation has joined the businesses.
Okay.
His company is profitable.
Correct.
His company is well compliant. That gives you indication, okay, this guy is clearly going for a valuation game and he has an end game of 3
IPO.
years.
Correct.
So if that is mapped, then I guess agreement comes later.
Correct.
Mind mapping is
Truly
very
agree.
important.
Truly agree.
Correct? Even if you fail most of the failed IPOs, I would say, or the IPOs which are not successful, invariably if you see the promoter shareholding is very less.
Correct.
And wherever the promoter shareholding is relatively higher, say 40%, 50%, 60%, the probability of that company passing the IPO benchmark increases.
Agreed, because it's their skin in the game is there and they look forward that second generation will take it to a new level.
Absolutely.
I think that's a right indication. So
Coming back to, sorry, to the second question about you was agreements.
correct.
So first thing is mind mapping. Second, so series 1, series 2, series 3, whatever companies we have invested till today. Prakash, when you sign the shareholders agreement, it's like a negotiation.
Agreed.
You have to take something, you have to give something, you have to take something, you have to give something. But there is one clause, probably I would say, which we have never negotiated on that clause is the day I give you the money, you are a owner of the company. Promoter has to go for IPO in 30 months, 30.
2.5 years, 30 months.
30 months.
Okay.
Plus 6 months for a cyclical event like
Correct,
what is happened.
correct.
That
What
is
is
needless
happening
to say.
now.
So promoter is to go for IPO in 30 months. And as a fund manager or as an investment committee, we have right to appoint the merchant banker.
Okay. Okay.
This clause, Prakash, I don't think we have ever deviated till today.
Okay.
Because ultimately, going back to the first rule, if you exit, the money comes to a bank account.
Correct. Correct.
So that clause.
Correct.
Now your original question was about Pantomath. Pantomath is a strong 60-member team of investment banking. So our secondary sale team is as strong as IPO.
Got it.
So in case that 30 months IPO does not happen, then of course there is some extension of 6 months. Then I have right to sell my stake to third party. So that's the investment banking team gets executed. So second clause, trust me, one thing I have seen, people ask me, do we have the buyback clause also with the promoter? See, I do have buyback clauses.
Correct. Correct.
In fact, I would say my 24 years of experiences, I have seen more than 200 shareholders agreement. Buyback clause is there everywhere.
Correct.
But I have a simple question. Suppose you are a promoter. You have 20% stake in your company. Will you buy my stake? Never, Prakash.
I won't buy. Right. Right.
So wherever the promoter shareholding is, 60, 70% higher, there, most of the time, you are not required to hit that buyback clause.
Correct. Correct.
And wherever the promoter shareholding is very less, 10%, 5%, even if you have the buyback clause, even if you trigger the buyback clause, the money will not come to your...
Because he doesn't have interest in the business. That's the reason he has diluted. I think that's the pain point of the market which you have tried to solve. That's the problem which you have solved as a fund.
Very correct.
That's great. So, is there any sector which you really look forward that these are the sectors we will generally invest, or any sector which you are looking that we will not invest in these kind of sectors?
Second question was very easy. So let me take that upfront. This is kind of we try to follow as far as ethics into our way of investment. Ethically also you can make money. I'm sure you will agree to this because you are a Jain itself. So we do. So tobacco, Prakashi, alcohol, then animal killing, gambling. Probably neither Pantomath has done any IPOs, nor do my fund has ever taken the bets on this particular thing.
Okay.
In fact, Prakash, wherever companies we have invested, we do give importance to the quality of the workers' toilet. Okay. Ultimately, you are there because of the labor, not because of I am working hard. They are working hard. Correct. Then having woman empowerment, having woman on the managerial position, senior manager position, sometimes on a board based on their eligibility. Okay. That also ethically we try to push. Environmentally hazardous project. Okay. That's a part of our IC node. Are you involved into any environmental hazardous projects or not? That's a part of our IC node. If that is there, even if you have a good profitability in my IC node, you get a little bit of a negative marks.
Got it.
So it's difficult. Coming back to the sector side now, again, exit is important.
Correct.
So if I'm trying to do the IPO, ultimately I'm selling it to somebody. So whom am I selling? Who comes at the date of IPO? Prakash, you know who comes at the date of
Mutual
IPO?
funds, insurance, and banks and
Bank.
all.
Correct. So mutual fund, insurance, and the bank, the big three boys in India, enters upon IPO because they
Correct.
can start their journey only from IPO or thereafter.
Correct. Correct.
Correct. So what we have done, your buyer should always be the richest person in India. Then your business will never fail.
Correct.
Some wise person has said this. So my buyers are richest people in India, which are nothing but mutual fund, insurance, and bank. So what I have done is, you look at my series 1, series 2, series 3 investing company. Invariably, we have gone ahead and invested in the darling sectors of mutual fund, insurance, and bank.
Okay, got it.
Consumer electricals, food and agro, tele infra. There are various sectors, but wherever I have invested are the darling sectors of mutual fund, insurance, and bank. If they buy, in fact, my selection parameters also are technically mirror image of the selection parameters of mutual fund, insurance, and bank.
Got it.
The difference is they come 2 years after me, I come 2 years before that. In 2 years, Prakash ji, we complete the process called as IPO.
Got it.
That's, you repeat the word process, not speculation. Complete the process called as IPO. As soon as the process is completed, the company is clean. Mutual fund is sitting on how much money that I did not have to tell you. You know better than me.
Correct. Correct.
That's my business model.
So I think the kind of the participation which is coming in the Indian equity markets, close to 20-30 lakh crore of fresh money is available for the fund managers in the next 2.5 years. And you are trying to invest in those companies which are IPOable in 2.5 years down the line, and which is loved by those fund managers.
Correct.
Because they are also looking where the promoters are stable, there is a growth in the revenues, manufacturing, it would be one of the key areas, second generations are in place and looking for the IPO in 2.5 years. So I think this clear exit path looks very, very good because see, there are more than 400 AIFs in the country. What we have learned and analyzed that the exit is the most important problem. And also just wanted to know what's the tenure of the product, because see, I agree that you will come with an IPO in 2.5-3 years, but what's the tenure of Bharat Value Fund in general, the last 2-3 series which you have?
So as per the new regulation, Prakash, the tenure starts from the first close.
Okay.
So let me answer this question in little bit detail. So in AIFs, you are not required to give, the minimum commitment is 1 crore.
Correct.
You are not required to give entire 1 crore upfront.
Correct.
You give into the tranches. Okay. So in my fund, typically you give 20 to 25% quarterly. So in 9 months to 1 year, I make the full drawdown.
Correct.
But my series 2, series 3, series 4 have been 5 years. The FOF is 5.5 years, probably the shortest. So that 5 years or 5.5 years start from the first close.
Okay, got it.
Okay.
Got it.
So within those period of 5 years or 5.5 years, I need to draw that 4 tranches, 20, 25 lakhs, 1 crore. I need to deploy. I need to exit. I need to return the money back to you.
Got
so
it.
the first entry and the last exit is 5.5 years.
Got it.
Very tough to get relatively the tougher task to get the extension, though regulators allow, provided 2/3, which is 66.67% of the investors give you an approval, then you have right to extend by +1, but that's a relatively challenging step to get the extension.
Got it. So generally you just said about the word fund of fund. So what exactly is this fund of fund and how you would raise the money and deploy the money into this?
Okay. So fund of fund, whenever you start anything, I always say that why are you starting this? That question, if you ask somebody, the answer comes automatically. So Prakash, what was happening, you also know it very well. The minimum ticket size in AIF is 1 crore rupees. Unfortunately, in most of our previous series, series 2, series 3, series 4, that 1 crore ticket was relatively tough to give it to investors because 999 is the maximum number of investors you can onboard. If the fund is 2000 crore, your opening run rate is 1 PAN card 2 crore. So what was happening is that most of the time we were not able to accommodate all the categories of investors who were investing 1 crore or 2 crore. So that was probably not right on our part also. So what we decided is that let's launch a fund of fund.
Okay.
what fund of fund will do is that fund of fund will give you an entry. Again, same concept, 75 to 80% into unlisted, 20 to 25% into listed. But their fund of fund, unlisted exposure will be into my previous series.
Okay. So you mean to say if somebody is giving a 1 crore of commitment, some portion might get into series 3, series 4, and the listed and the unlisted what you are. So that's the blend which you have created.
That's the blend. Just no commitment, because in AIF or equity, fund managers are not allowed to commit anything. But if you just put it on a piece of paper and do a simple arithmetical calculation, then technically the series 3 and series 4, you are invested in series 2 also, series 3 also, are little bit ahead of fund of fund.
Correct.
So if they exit, say for example, series 3 has invested in a company called A. If that company exits, the money will come to series 2 or series 3. Series 3 will return it to FOF and FOF will return to you. So you have a tendency or a probability of earlier exits. I'm just putting out on an arithmetical chart.
Got it.
So because your tenure is not starting from the day you are invested, the fund of fund is investing in a downward fund which have already started their journey.
Okay.
So
if I see, let's say we are sitting in March 2026 today, and today I look forward to invest in, let's say, fund of fund. I believe today we have to pay 20%. What would be the next drawdowns, and tentatively by what time I should expect that my capital should be back to me? I know it's very difficult to ask you at this point of time, but at least some capital is returned back to me. What would be those timelines as such?
So Prakash, right now to sign 20%. Again, this fund will close the moment I hit 999 investors.
Correct.
That is needless to say. So right now the drawdown is 20%.
Okay.
Safely you can expect 20 to 25% drawdown coming to you every quarterly.
Okay.
So 9 months to 12 months you will have to give me entire 1 crore rupee. Most important point, it's not that I ask money tomorrow morning. As per, if you read my PPM carefully, every time before asking the money, I have to mandatorily give you 21 days notice.
Okay.
Then only you have to give me money. So it's a relatively safer or a longer period horizon to.
So primarily you are saying, let's say today if I onboard in March 2026, I pay 20% now, and every 3 months it will be 20 to 25%. So tentatively by December 26 or January 27, you will take the entire money.
You can assume that way. I'm giving you
a 1 month here and there. That's okay.
Correct.
And what would be the timelines I should think that my money should start coming in, or my capital would be completely back to me?
So I always tell my investors, your capital will come back when I exit.
Agreed.
So when I give the money to the company, I have a 30 months clause.
Correct.
Assume 6 months extension. In this kind of a fund, you should always assume 6 months extension. So the day you are given me the money, technically, I would say you should expect 3 to 3.5 years from the day you have given me the money.
Got it.
Plus little bit, again, I'm not, of course, as a fund manager, you cannot promise anything, that's legally wrong. But just putting it on a arithmetical paper, FOF can expect a little bit of early exits, because FOF is investing in fund which have already started their journey. So the probability of those funds where FOF is going to invest, their investing company hitting the exit route is much earlier.
Okay. So once the money, so let's say I gave money in FOF, you invested in series 3 and series 4. In series 3, let's say 2 companies got exit in, let's say December 2026, 27, next year.
Okay.
So will you return the money or do you reinvest the money?
One thing is very clear, sir. 5 years is the outer tenure. Prakash, whenever my fund has exited from unlisted opportunity,
okay,
we have returned the money back to the investors.
Okay.
That 15% listed can do the rebalancing.
Got it.
That also I have never done, but I have kept that option open, rebalancing.
Correct.
But unlisted, if I exit, return the capital along with the profit.
Got it. And what's the portfolio diversification, or any single stock or any single sector? What's the maximum you put the money into?
I would say this was the most intelligent question, Prakash, because I always tell my investors that whenever the difficult situation comes,
correct,
The only thing that can save you is the concentration portfolio. Correct? So that's called concentration risk in our methodology. So we have a policy that whatever is the corpus, try not to invest more than 10% or 11% of your corpus into one company.
Okay, one company, not more than 10 to 11%.
Correct. So in one series, I have close to 12 to 14 investee companies.
Got it.
And try not to give more than 20% to one sector.
Okay.
Having said this, till for all the previous series, as of till today, my largest exposure has been in food and agro, which is 16.5%. So I have kept that 20% for a sectoral cap, and largest exposure in company was 10.5%. So 11% is a maximum. So your concentration risk concentration is very well diversified. Plus, being the fund of fund, you have 2-3 funds. So you can have 25 to 30 companies under your portfolio because of the fund of fund.
Okay.
Most important, Prakashji, is about the fees. Though I do not want to talk about the competitors so openly, but most of the time internationally, even in domestically, I have seen the fund of fund are subjected to double fees.
Correct. The above fund and the below fund where it invests.
Right. So if you read my PPM very carefully, the fund of fund will charge you 2%, and the fund of fund investing into downward fund, since you cannot open the structure with a 0% fee, it is 0.05%.
5%.
5 paisa. 5
Okay.
paisa. So totally 2.05.
Okay.
That's the
And I have read that your hurdle is 15% flat, which is, I believe, is very amazing. And the profit sharing is 20% with catch up. So will it also be charged on both the levels, 20%, 20%, or is it only at the fund of fund level?
No. So again, hurdle rate 15% per annum. So if I use your money for 4 years, it becomes 60.
Okay. Okay.
So the rule says, if you give me 100 rupees, okay, and I use your money for 4 years, so first I have to return your principal.
Okay.
Then I have to return your hurdle. So unless and until, assuming I am using your money for 4 years, unless and until I am returning your 160, I cannot charge the profit share, first of all.
Okay.
And then just like management fee is not there at the 2 level, the carry is also not there at the 2 level.
It's at the fund of fund level only.
So there is no double fee drag. In our language, we call it as a double fee drag. There is no double fee drag.
Okay.
As simple as that.
Okay. Looks good. And is there any possibility of any NRIs investing in your fund?
Yes, Prakashji. So my earlier series had presence in GIFT City also. So to invest in AIF, you need to have PAN and you need to have DMAT. If you have the PAN and if you have the DMAT, the NRIs can directly invest into my fund of fund.
Okay.
Again, no extra fee for the NRIs.
Okay. Okay. And since the way you have explained that the entries are actually in a good companies, then the exits are very, very clear. That's the most important part of any investment philosophy. There is always some kind of risk which is associated with the equity market. So generally in the fund level, what are the kind of risk which you foresee in this kind of fund?
I understand from where you are coming, because there is called as a
because we are sitting in March 2026 and the war is known to everyone today. The kind of America, Iran, Israel, everybody is involved in war. So there is always a risk of money in the equity market. So what kind of risk you foresee in the fund?
So Prakashji, I'll give you a frank opinion about this, because if you're talking about the war, I have to give you answer in a global perspective, not certainly related to my fund. See, Corona was the worst event we have seen in the human mankind.
Correct.
Capital market point of view.
Correct.
I guess 10 months and some 20 days, we were back to the normal, where we had gone down and we have come back to the normal.
It was a V-shaped recovery which we saw.
Correct. Now you may say, forget Nishad Corona, it's a gone past. After Corona, what has not happened? There was a war in Russia, we had a war in Gaza, sanctions on Iran, India and Pakistan were on the verge of fighting each other. Has Indian markets not gone up, down, up, down, up, down? But tell me one thing, I do not remember Indian market was down throughout more than 4 months to 5 months.
Agreed.
So important point I want to make over here. See, if any fund manager is telling you I can catch the cycle, it's relatively tough. You can
Agreed.
predict the
Nobody,
cycle.
nobody can do that.
So my statement to all the investors is cycles will come and go. Cycles will come and go. Have a faith in the Indian economy. What I try to do is only two things. Try to enter low. Try to create the delta on the date of entry that can be available only in unlisted. Listed is relatively tough.
Agreed.
Clear the compliances. At max 4-5 months waiting here and there because of the market situation can happen. Otherwise, I do not see any major risk because I am avoiding startups. I am avoiding the companies where promoter intent is bad. Even if liquidity crunch happens, I have invariably, most of the time, more than 75 to 80%, I have given the growth capital because of which at least the balance sheet size will increase. If you see, more than 85% money invested by us till today are PAT positive,
Agreed.
and not too many investors are trading into our stocks. So liquidity is always entry level discount we get because of the liquidity at the date of entry. So if you follow 4 or 5 credentials, then again, as I said, the timing may be little bit 4 or 5 months here there, but completely, you can delay the train. It will not be derailed,
Agreed.
provided you enter low and complete your compliances.
Got it.
That's my statement to you.
Thank you. Thank you, Nishadji. I think you have beautifully covered how we invest, how we exit, how the process of wealth creation is with there, what kind of risk and rewards are associated with the fund. The best part is the fund of fund where you are investing in the existing fund of yours, which is series 3, 4, some unlisted and the anchors, which will give a spread, any investor, a 30 to 35 stock spread. And the exit looks forward in 3.5 years, the cash flow will start. So I think it's a very unique fund, and thank you so much for your precious time. So I would request any investor, if he is watching this podcast, we request that please go back to your financial planner, wealth advisor, or the IFA or the MFDs, because they understand your risk appetite and asset allocation, and they can guide you very properly the returns, the rewards, the risk associated with the product. As per our internal calculations, what we believe that if any investor has got a investable surplus of 7 crore plus, which means removing his real estate, if he has equity, bonds, FD, mutual funds, stocks, PMS put together 7 crore, then he should allocate 1 crore rupees over here. But ideally, again, we would request, please go back to your financial planner advisor, because they are the doctors who can actually prescribe you the right kind of fund you should invest in. Thank you so much.
Thank you. Thank you.